clinging on to a sliver of hope that the recession isn't coming, sorry. Even Fed Chair Jerome Powell said that we must risk recession if we want to combat inflation. It's a catch-22, and it's the worst that it is. Powell said, and I quote, "Is there a risk we could go too far? Certainly there's a risk. The bigger mistake to make, let's put it that way, would be to fail to restore price stability." He said the Fed didn't have the luxury of moving rates up gradually because of concern that the recent period of high inflation may lead consumers and price setters to expect elevated prices to persist. Since March, the Fed has raised its benchmark federal funds rate 3 times from near zero to a range between 1.5% and 1.75%, including a 0.75 percentage point rise this month, the largest in 28 years. Mr. Powell and many of his colleagues have signaled that another increase of that magnitude is likely to be warranted at the Fed's next meeting, July 26th through the 27th. Mr. Powell's remarks Wednesday are his latest stressing that the Fed will keep raising rates until it believes inflation is under control, even if that causes a recession. While recessions are painful, typically resulting in loss of jobs and economic output, Fed officials believe that high inflation is worse because waiting to address it could require an even more severe downturn later. His message is aimed at preventing inflation expectation. To his credit, he said that the Fed is hoping to slow U.S. economic growth enough to bring down inflation, but without causing a recession, a so-called soft landing. However, the war in Ukraine, which is pushing up food and energy prices, has made this outcome more difficult. Powell is right. The U.S. economy shrank at an annual rate of 1.6% in the first quarter of 2022, the first decline since the second quarter of 2020. The Bureau of Economic Analysis reported Wednesday in a worse than expected update to last month's figure, which showed a decline of 1.5%. For years, following the 2008 crisis, large economies had relied heavily on central banks to boost demand, leading to a frequent quip that they were the only game in town. On Wednesday, Mr. Powell said that he was concerned that this was again true, but now the opposite direction, that governments would rely excessively on central banks to bring down inflation by squeezing demand rather than by addressing constraints on the economy's capacity to produce more goods and services or to boost workforce participation. There's much too much focus on demand management, he said. He declined to elaborate on what other policies might be pursued to help economies maximize growth. Now that we're sure of what's coming, this only leaves us to figure this out. Are you prepared for recession? Is your portfolio designed to get the best out of recession? And do you have enough liquidity to cover your needs in case the recession extends? Let us know in the comments below. This has been Natalie Denise for Noble Gold Investments. Please be sure to like, share, and subscribe, and we'll see you guys later.